it's not a massive surprise to see Philipp Rickenbacher departing. Someone had to take responsibility and accountability for the issues that led to the loss that the company disclosed. The reason why we didn't see anyone else leaving was partially because Philipp was essentially the main person who had to shoulder the blame, but we've also seen actually someone on the board. There's also David Nichols, the chair of risk committee of the board of director, that is not going to be re-elected or is not standing for re-election. So it wasn't as obvious, but that's also another kind of a sacrificial lamb in a way. In terms of replacement and candidates, there's still Nic Dreckmann, that was actually recently appointed as deputy CEO, who's now stepping in. And the board of directors have said that they're looking for external candidate this time to take the top role. So we'll have to wait and see who's going to come on board. But it's definitely not someone from the inside, which is quite interesting.
Okay, so those comments coming just in the last half hour. We knew that regulators were looking at the risk reporting structures at this business already, Myriam. What can you tell us about risk management and where it fell down?
So there was a lot. The structure at JB was very interesting, and the reason why FINMA was investigating this whole division is because of the reporting line, that instead of going into the chief risk officer, all of these businesses were reporting into the CFO, which is quite unusual for a business of this nature. And this is what the regulator was looking into. It's not clear whether this was, the departures and the decision to exit the private debt credit business was suggested by the regulator. But we know that Julius Baer was under investigation and that they're liaising with the regulator. So it's not a massive surprise, but we can also draw conclusions that this was something that was looked into and they've taken action, actually.